When you're playing a video game, there is a clear start, end, and you usually will be given instructions on exactly how to beat or win said game. Now, when it comes to personal finance and investing though, many people get lost. They pay attention to the wrong things and don't actually understand what it takes to win. So in this video, I'm gonna go into excruciating detail on how the game of investing is set up, how to play it the right way so that you can win at it, and explain why most people are playing a game that they're guaranteed to lose. Then I'll give you the cheat codes that will help you level up faster than anyone else, so let's get into it. So first, all video games are constructed by game designers. Because of this, they have rules and bounds in which they must be played by. So for example, in World of Warcraft, one of my favorite role-playing games of all time, while the world is technically an open world and you can do whatever you like, in order to beat the game, you should probably level up your character, find the right equipment for said character, and ultimately beat the final boss with a group of other players. Now, in the process of leveling up though, there are going to be some zones and dungeons around the world that are just easier and more efficient for gaining experience. And whenever these role-playing games are released to the public, usually the hardcore gamers figure out the most efficient leveling routes and dungeons to do in order to accelerate their character's progress as quickly as possible. It's really not uncommon for gamers to just spam a certain map or area in order to level up as quickly as possible, even if it is boring. Well, the game of investing is no different, and the first cheat code that I want to share with you guys is that you should be exploiting the rules in your favor when it comes to investing. So what do I mean by that? Well, the World of Warcraft analogy here would be us spamming a certain dungeon because it gives the most experience at our level. In investing, we should be looking to push our edges as much as possible, and one way that we can do this is by operating within the rules that the government sets up for us to invest. So one account that comes to mind is the Roth IRA or the Roth 401k. These are types of accounts created not too long ago named after a Senator William Roth. They have only existed since 1997, so they've really only been around for 28 years, and what's crazy is how popular they have become in this short time. According to recent data from 2024, 66% of all IRA contributions are going to Roth accounts, and according to Fidelity's retirement analysis, Roth IRAs are the most popular retirement saving vehicle, even more so than 401ks. That's because many investors realize that just like in World of Warcraft, these accounts are so good that they are hard to ignore, and it's what we want to exploit, aka we want to use them at any opportunity that we can get. The first reason why it's so good is that your earnings and profits are growing tax-free. That means when you retire and you withdraw all the earnings on this account, you won't pay any taxes on it. So you can invest in this every single year, and say if your Apple position gets to, let's say, $2 to $3 million when you retire, you won't owe any taxes on that sum. The second advantage is that for the Roth IRA, you can have penalty and tax-free withdrawals of original contributions at any time as well, which gives you a lot of flexibility. And the third is that the Roth IRA or the 401k are not subject to required minimum withdrawals. In a traditional IRA, they require you to start actually withdrawing from those accounts at a certain age. I think it's around the age of 73. But since many people are living longer these days, and if we know that all the growth of compound interest is at the end of the compounding period, having this advantage of not actually having to withdraw will be amazing and offer the maximum flexibility for us later on in life. Now, if you're under the age of 50, you can only contribute $7,000 a year into the Roth IRA. And if you're over the age of 50, you can contribute $8,000 a year as a catch-up mechanism. Also, remember that the Roth IRA contributions are subject to how much income you're making. For 2025, individual tax earners earning less than $150K per year and joint filers earning less than $236K per year can contribute the full amount to the Roth IRA. If you earn more than those numbers, you can always opt for something called the backdoor Roth IRA. That's something you can research yourself, but it's essentially a method where you contribute to a traditional IRA first, then you roll it over to a Roth anyway, and that's even if you are making that much more income than the income limits. So anytime the government or the rules of investing offer special benefits or tax advantages, it pays to understand them fully. These aren't loopholes or exploits in the negative sense. They're intentional features designed to encourage long-term investing. The most successful investors are simply the ones who learn all the rules of the game and then use them to their advantage. The second investing cheat code is deceptively simple yet remarkably powerful. It's consistently increasing your contributions over time. In an RPG, leveling up requires more experience points the higher your level is. And in real life, real wealth requires you to progressively increase what you put in. Pretend you're 25 years old investing $500 a month to your investments, and that's about 10% of your salary at that time. Then 10 years later, maybe your salary has progressed to a point where you're earning twice as much as you were when you were 25. If you kept your contributions of $500 a month the same, that now only represents 5% of your salary. I know this sounds elementary, but if you are getting raises, an easy cheat code to use is to simply increase your contributions as you earn more money. Data shows that only 30% of retirement account holders increase their contributions year over year, even though people are receiving regular salary increases every year. This means that if you're willing to take this simple step, you are going to level up and progress your character faster than those that aren't. In video game terms, it means you're going to get to the end game, aka retirement in real life, a lot faster. And the beauty is that if you're able to do this consistently, these incremental increases in your contributions could mean a ton of money down the road after, let's say, a few decades. Pretend you have two friends aged 30, we'll call them Clay and Steph. Clay uses a flat contribution approach where he invests $500 a month for 30 years and he never changes the amount. By the time he's 60, assuming a 7% average annual return, he'll have around $606,000. Steph, however, increases his contribution by his favorite number, which is 3% every year. That means in his first year, he's going to be investing $500 monthly, and then by year 2, it's $515 monthly, and then by year 3, it's $530 monthly, and so on. By age 60, Steph has invested about $295,000 total, while Clay has only invested $180,000. While Steph does contribute about $115K more over 3 decades, his account is now worth more than $820,000, or $214K more than Clay's. The beauty of this approach is that each annual increase feels minimal. You're only adding about $15 to $35 more each year, but the cumulative effect is very powerful. Most people will not do this, and even worse, most people don't even contribute consistently or monthly, almost guaranteeing the fact that they will lose the game later on. Cheat code 2.5 today is simply subscribing to my free newsletter called Hump Days. That's where we come out with free business and stock news twice per week on Wednesdays and Sundays. We have now over 70,000 happy subscribers, and I think if you like what we put out on this channel, you'll also enjoy the companion newsletter. The link will be down below, and yes, this was a subtle plug. All right, cheat code number 3 today is to take the shortcuts. What this means is that you should take advantage of crowdsourced player information and just not overcomplicate things. In adventure games, role-playing games, and even strategy games, there are usually experienced players who have written up full walkthroughs and guides on how to get to the end of the game in the fastest manner possible. So instead of randomly exploring the world or doing side quests, which in the investing world looks like individual stock picking or buying penny stocks, we're just going to go with the most straightforward strategy to get us to the end game and retirement as soon as possible. More than 90% of financial professionals fail to beat benchmark indexes over time, so if you are investing for the long term, it's just easier to grab an index fund and just invest that way. If you want more information on how to actually invest in index funds, I'm not going to cover that in this video, but I will leave a bunch of resources down in the description below for you guys if you're interested in getting started with index fund investing. The fourth cheat code to really level up your investing game that most people aren't doing is setting clear boundaries. In video game terms, this means not zoning into a dungeon for levels 55 to 60 if you're only level 10, or perhaps exploring a new advanced area where you're just going to get one-shotted by a random little goblin. With investing, you need to establish some clear boundaries based on your personal risk tolerance and preferences. The easiest way to figure out your risk tolerance, if you don't know it already, is to just take one of those investor questionnaires available on the internet. I will leave one linked down below. But the whole goal is to make sure that you know what your maximum volatility that you can handle is, and that way you're going to be making decisions for your investment portfolio that are in line with where you are at. And the biggest mistake an investor can make is literally zoning into a dungeon that is too high level for them. What this looks like is perhaps investing in call options expiring weekly or perhaps even daily, betting the farm on a small stock that they think is going to 100x because they saw some YouTube video, or perhaps maybe they heard a friend say that, oh, it's going to go to the moon. Instead of doing that, what we want to focus on is just accumulating gains and making sure that we don't lose money. That means if you're more risk averse, you're going to want to choose from a pool of more conservative investments. If you're active and risk on and you pay attention to the market every day, perhaps you buy a couple individual stocks, but it doesn't mean your whole portfolio is going to be in them. Investing in individual stocks will take more research and is more hands-on. However, you can get some really high upside in your portfolio if you are able to own some stocks that really do well. For example, I own Nvidia stock, Meta stock, and Robinhood stock, and all of these have performed like incredibly crazily in the past few years. It's unclear whether or not I'm just getting lucky because the time horizon is too short. However, so far it's been a really good thing for my portfolio. For some of my friends, they invest in real estate or perhaps alternative assets like cryptocurrency. And you just have to know that if you are investing in riskier assets, you could lose more money just as easily. Cheat code number 5 today is to re-spec regularly. In video game terms, the way that it works is that as you progress through any game, you might initially allocate your skill points heavily into, let's say, defense and survivability, but later on, as you acquire better gear and face different enemies, you need to redistribute those points to maintain optimal performance. Players who never re-spec find themselves with outdated builds that struggle against new dungeons and new monsters. For example, you wouldn't want to allocate your skills into a defensive build for someone that's level 10 when you are actually level 60 because the priorities change as you level up. And the same thing goes for investing. Because your investment strategy at say age 20 is going to differ a lot from someone who's age 65. And that's where asset allocation comes in, and that's the practice of dividing our money between different types of assets like stocks, bonds, and cash. It's one of the first things that we should be looking to figure out when we are investing. Chances are, if you're someone that's on the younger side, that means you're going to have a lot longer term time horizon, which means that you can stomach more risk over the long period of time. Your portfolio might look like 80% stocks or maybe even 100% stocks at the age of 20. Equities are usually the riskiest type of asset other than crypto, of course, but let's say you're at 100% stocks at age 20. As you slowly age up, you're going to start adding in different assets like a mix of cash, bonds, and other types of alternative assets, perhaps real estate. The usual asset allocation of someone who retires is more of a mix of equities and bonds, and that's more the traditional approach. A conservative risk profile of someone who is retiring might be something like 40% in stocks and 60% in bonds, but I answer all the questions about asset allocation in a video about what your portfolio should look like by age on this channel as well. The point is that you should be re-speccing pretty often and at least reviewing your allocation every single year to make sure that it still fits within your risk tolerance and your goals. All right, if you'd like to check out that video on what your portfolio should look like by age, I will leave it linked right here. And as always, make sure to subscribe. Thank you for being here, and I'll see you soon, hopefully in Azeroth. Peace.